So that's the construct of the market. But the key question is that within big themes, where are we headed from here on, and how should you place your bets in the market right now? Let's try to decode that. We are being joined by Prateek Agrawal, MD and CEO, joining us of Motilal AMC. Hi, Prateek. Great to be speaking with you. Firstly, Prateek, give us some sense on the markets as well, because there seemed to be a bit of a pressure on the higher levels for the benchmark indices, though we have seen a double-digit return from the April lows. But what is the big theme that you're catching for the Indian markets right now?
For the Indian markets, the thing to look forward to is benefit from low oil. So government finances could look significantly better than budgeted because lower oil means some bit of gains goes to the population, some bit of gains goes to the government. Government finances look good. Hopefully, either the growth, the spending increases, or the borrowing reduces, which means further downward pressure on interest rates. So lower inflation, lower interest rates. We have had two cuts. We may have two more. That makes it just very good for risk asset classes like equity. So that is the threat to look forward for India. And well, there are uncertainties. US may, for example, do a deal or not do a deal, but direct impact of that, at least in the immediate term, on India should be very low. We export just about 80 billion on a 4.1 trillion economy. So, and spaces that may benefit if UK deals of any guidance are hardly there in the market. So we think we are one economy which is very inward looking, and that in a period like this where there is so much happening in the world is a positive. So that is what it is for India.
When you say lower oil prices, are you then saying buy banks, buy rate sensitives, or buy consumer sensitives, because less oil prices is good for consumer, it's good for companies, it is good for margin expansion?
Yeah, so manufacturing, yes, some bit of benefit will go into manufacturing. So that is something that we like. Airlines maybe, so that is import parity pricing on cost. So if the traffic holds, then there would be higher margins. Banks no, because if more rate cuts happen than anticipated, then the pressure on NIM will start to manifest itself. NBFCs, yes, for the same reason, their input is money from banks, and the cost of that would reduce.
Okay. This market right now has, perhaps, barring a concern which is centered around valuation, not too many concerns. Tariff seems to be getting sorted out, macro seems to be getting sorted out, geopolitics is getting sorted out, globally also wars are getting sorted out. So are we nearing what could be called a peak of good news? Because markets climb the wall of worry, they come down on ray of hope.
No, so if you meet investors, we have seen investors still worrying hell of a lot because we have seen a lot of events in the recent past, and those cause turmoil in the mind. So if you look at flows into mutual funds, for example, last 2 months were not very strong. This month could be an encore. It is not all positive. But one positive which is happening, which you missed, is good result season versus what was expected. Uh, 3-4% earning growth was expected. We are getting much better earnings growth. So there are things to fuel the rally forward, even if we talk immediate term. Weaker dollar, DXY at sub 99 has happened after a long while. That points to dollar moving away from the US all over the world. And if India sticks out as being slightly better, then we should get some share of that. So you would have foreigners also buying more than usual, domestics continuing to buy. Your IPOs are still some distance away. The big momentum there would be some distance away. So good for secondary market. So 1.5 month period, I think, is a sweet spot for secondary market.
Right. So, that's really the big question, right, Prateek, right now, because, you've got the earnings season behind you right now. The index has crawled it back to that 25K mark, good buoyancy, even in the broader market. Where is it there is still value and, of course, growth visibility also coupled with that on the table?
No, simple, there is no value. Okay, so if you are hunting for value, this is not the market for you. Hunt for growth. So there are two styles of making money, the value style and the growth style. I think the best of value is behind us. We think, being growth investors, lower interest rates, with lower interest rates with continued outlook on good growth is a very good combo for growth style of investing. We think our time has come.
Okay. When you say there is no value in the market, then why should one be invested in mutual funds? Simple question. अगर सस्ता नहीं है तो म्यूचुअल फंड में क्यों इन्वेस्ट करो?
क्योंकि growth तो है. So this is a period in the life of a country when several new spaces which offer strong growth, not for 1 year, but multiple years, are all coming up at once. So in the 90s, you got software, right? New space delivered huge growth for several years. In the same light, if we see last 5 years, and it is happening as we speak as well, many newer spaces all at once are happening into the market which offer the same combo. We have been saying this now like a parrot every time you have me that it is not a period of the index. It is a period of alpha. It is a period of these newer spaces where growth and sustenance of growth is of another order versus the index.
All right, but Mr. Agrawal, you have been bullish on the EMS space as well. Give us some sense that how do you see the valuations as well as the growth within this particular segment, as well as from here on, how do you see the stocks moving as well, if at all?
See, what we run is portfolios, not single stock, single sectors. All the growth spaces find representation in our portfolio. Yes, EMS is there. Yes, renewable is there. Yes, defense is there. Yes, NBFCs are there. Capital market plays are there. Luxury is there. And more. New tech is there. EVs till now we haven't found a name, so it's not there. That is where growth is. Now we have to find spaces where growth corrected for valuations makes sense, which is what managers do. But if you look at our fund house, these are spaces you will find in practically all of our funds. Is the method in madness of what we do. We are out and out growth investors. We think our portfolios are some of the highest growth in earnings portfolios in the country.
Okay. All right, Prateek Agrawal, appreciate your time. Thank you so very much for joining us.
If you like this video, then like, share and subscribe to ET Now.